RBI versus the government, the crude comfort, our macros on the mend, many questions about the Indian economy. It's time to take stock of what is the state of the Indian economy with the Economic Affairs Secretary, Mr. Subhash Garg, who joins us right here on ET Now. Thank you very much, Mr. Garg. And I'm tempted to ask on the RBI, but I think a promise is a promise. So let's begin with the macros. Crude.
It's essentially on the state of the economy.
Yes, state of the economy. Crude has essentially come down. There are lots of people who believe that crude has come down, inflation is under control, and suddenly the heavens are smiling upon us. Too early to call it, too early to uncork the bubbly, too early to say macros on the mend?
I think that's absolutely right. We should never judge the oil, especially the commodity like oil, to have made permanent difference by what has happened in a couple of weeks. This was as untrue as two months back or 1.5 months back. A lot of people are talking about oil crossing $100 per barrel, and all kinds of doomsday scenarios were written at that time. Now it has come down to about 60. It can go again, it can reverse. So I think we should be taking it more somberly, evaluate it and wait for some more time before you uncork.
Calling it a hooray. But tell me something, sir. What kind of a comfort does the present level of oil mean for both the fiscal and the current account front?
In my judgment, and we have discussed this earlier also, for the fiscal, for the current account, for the economy as a whole in terms of inflation, growth. So the oil situation affects us in so many ways. On the fiscal side, it changes the behavior of a lot of people when they see that this will play into current account being reduced, which will have lesser impact on rupee or withdrawal by the FPIs and others. Then it starts affecting our bond yields as well. So from the fiscal point of view, one of the direct, though it's not the sole factor, there are many other factors which the way you manage the fisc, you can undo the benefit of lower oil prices if you have runaway fiscal deficits, right? So clearly on fisc it's positive. We can see the bond yields, which are already down.
That's right.
May further come down. On current account, it makes a lot of difference. Roughly about $1 billion is added to our bill.
That's right.
If the price go up by $1 per barrel. So if it goes down by 20 or 25 dollars per barrel, in an yearly basis, this would be the kind of impact. So $25 billion, though it's not going to be there. For a great part of the year is also, but it will have a very good impact. And if it also, which is already visible, that the FPI reversals, which was very much evident in October, gets positively reversed, then not only the current account, but the capital account will also get comforted. So a lot of positive.
But with oils at these levels, is it safe to say that we will perhaps be in the range of 2.2 to 2.5% as far as the current account deficit is concerned?
No,
because there was speculation that you could be at 2.8 to 3%, and that was worrying people.
Right. But as I said, please remember 7.5 months or 8 months are already gone.
So there's about 4 months left in the fiscal.
Only 4 months left. I would be happy if it stays around 2.5 to 2.6 this year.
2.5. And does this oil, I mean, how does this oil make that 3.3 less challenging as far as the fiscal deficit is concerned? Because there were people who thought with oil prices going up and, tax collections still to stabilize on the GST front, meeting 3.3% is going to be challenging. Does this look less of a daunting task with oil down?
Quite right. So oil affects in certain ways. If the prices go up, then there is a pressure to reduce the excise duty, etc., to bring down the prices. That pressure definitely has eased up completely. It affects if the oil companies bear some burden, so their dividends might come down. So there are several ways.
Right.
Then there are linked prices of LPG and kerosene, etc., which is paid through subsidies. And if the inflation goes up, then other effect on other commodities also in transportation cost etc. also makes. So there is some visible impact, but that hopefully for the time being is much less accentuated. In fact, it neutralizes, and if it stays for next 4 or 5 months, I think it would be it would reduce our concerns quite a good.
I will ask you a question on the revenue front, and there are people who believe that the GST, yes, has the last reading was 1 lakh crore rupees, which is very heartening. It has come after the price tax slab rationalization has happened, but it is still to stabilize to an extent that it becomes very viable. How much of a constraint is the GST revenue going to be? Because there are independent experts out there who point out you could be falling short of about 1 lakh crore rupees, and I'm presuming that is going to have an impact on your overall assessment of.
So I would be waiting for this month's data, which should be coming any time now.
Yes.
In the next 3-4 days. We hope that this month also we will do 1 lakh crore or so, but let's wait for the data to come. It actually keeps on coming every day these days. So that is one, but taking that into account, I don't see a shortfall of the extent you mentioned. That certainly seems
a very big
number. Out of concern. But there may be a smaller shortfall on the GST front. But we are doing much better on the direct taxes this time, also on non-taxes. So hopefully much of that would be made up by the other sources of taxes.
One of the other big revenue streams that seems to be under pressure right now is divestment. And I think there are a lot of people worried out there who believe that 80,000 crore in any case was an ambitious target. How are you going to get to that number? Are we looking at a big sort of an ONGC, HPCL kind of a deal?
So 80,000 in comparison to what we did last year of over about 1 lakh crore.
That's right.
It's ambitious, but
lower than that,
if we could
yes.
do 1 lakh crore last year, we can do 80,000 crore this year as well. And a lot of measures are being taken. Our assessment at this stage is that we'll be able to do it. ONGC, HPCL transaction was quite big, which was done last year. I think we'll have at least one such transaction, but maybe not of this big size this year as well. And all other buybacks, OFS, ETFs, and all those measures are being taken. And at this stage, we're keeping our target unchanged.
You're keeping your target unchanged. I have a couple of questions on divestment because markets are always interested to know what the government is going to do on that front. So my first question is that while ONGC, HPCL did rake up the divestment revenue to over 1 lakh crore rupees, there are people out there who will believe this is not real divestment. You're making 2 PSUs at the behest of the government merge. Have you said goodbye to real privatization then?
No, I think what you mean by real privatization is the strategic
stake sale, yes.
Where the units or the entities is completely sold off. Bulk of the divestment has been by taking baby steps, giving a couple of percentage of your equity to be shared by the people of India. That is the main thing, and there are many entities where we would not go down below 50-51% or something. And that would remain. There are quite a few companies identified for strategic divestment. A couple of them have already been, so Dredging Corporation, the decision is to strategically sell off. There are some other companies. So the strategic sale, which is the most difficult one, is also on the agenda. It's not that it's not there.
How tough do volatile markets make strategic stake sales of the kinds that we are talking about, or tapping markets altogether? Because a lot of government paper can't crowd the market when markets are volatile. So has this been a tough market to?
Very true. There's been volatility in the market this year. Though first couple of months it was more stable, but in last 3-4 months it has been the case. volatility adds to, because you can't plan things well. My expectation and sense is that possibly that volatility is now over. We should see much more stability in the markets going forward for the next 4.5 months. Then the markets today compared to a year back are in positive category now, still about 5 to 6% higher than what they were at that time. So it's not low markets. Volatile is what we expect, but not. So these are fairly reasonable levels in market to plan for the disinvestment.
So you believe between November end to say the end of March, you will be able to tap markets for many more divestments and stake sales?
Yes.
Is there a number you have in mind?
No, we will aim at our 80,000.
80,000. Why I asked you that question, sir, is when you say an ONGC HPCL kind of a deal, what space is that deal likely? Are we talking about an NTPC SJV and are we talking about REC PFC? Which space are you really looking at? Because that was a massive deal.
I wouldn't go into these specifics, right?
Okay, when you say that you expect markets to be a little more stable now than they have been in the last few months of volatility, I think in the same breath we must talk about currency as well.
Right.
The rupee had been extremely volatile and everybody was watching every fall of the rupee. Now at levels, even though it has depreciated significantly and one of the worst performing Asian currencies, as the Economic Affairs Secretary, do you believe the rupee is finally at a level where it's reflecting its real value? Because many people thought it had appreciated too much and there wasn't any intervention then.
So it's always difficult to put what is a fair value. There are various ways in which the experts and others do it, rear, near, other methods. But in my judgment, the real value of rupee is determined by the demand-supply situation of the dollars demand, dollar supply. We are roughly about 80-85% dollarized traded economy. So most of our trades are in dollars. And therefore, how does dollar behave or what is the demand? It also, so that is one aspect. Secondly, what is the situation of dollar in America and elsewhere? So if the policy being pursued there is where dollar is likely to strengthen or the economy is behaving in such a way. So these are the two main factors which to my mind determine. Both the situations to my mind now are returning to a more stable and comfortable levels. So after the oil situation and other flows coming, the supply of dollars has increased in Indian economy than what the demand is. Then a lot of people who have to hedge and all, they also take decisions based on what's likely to happen.
True.
So they have also calling most of the forward purchase, etc. And those kind of things are resulting into the appreciation of rupee from the levels it has reached. On the US side also, what you see is that now the growth in the economy seems to be
a little tapering
off now, which is reflected in dollar becoming a little weaker than it was. So the dollar index is also coming down. The bond yields in US are also, there are some people now even talking that whether the Fed would be able to go through further hikes, because the inflation situation also seems to have become much less worrisome for the Fed there. So all these factors taking into account, my sense is that we should see some more appreciation of rupee in times to come. I've felt and I've said that taking fundamental factors of demand supply in the US situation, a level below 70 seems what is most likely the market outcome. I'm not putting a price there.
But do you believe rupee can go down to levels below 70?
To me it seems at this moment this is headed there.
Headed there. And will that be the real effective exchange rate truly reflected in the rupee?
No, it's again
by below you mean sub 70 levels?
Sub 70, right. Sub 70, that's
fair point.
The Reserve Bank only intervenes to bring the volatility, orderliness in the volatility should be out, orderliness should remain. So let it have its own course.
Fair point. A quick question though I wanted to ask on the oil, because oil prices have gone down and there will be this clamor for some potential benefits for the consumer at large. Do you believe the time has come for that, or is it time that OMCs that kind of did bear some part of the cost need to first flush their losses?
See, when the consumers bore the brunt of the increase, it's very fair to expect that the benefits are primarily meant for them. So, and that has been done. You've seen the oil, petrol and diesel prices coming down substantially, and every day this comes down and all. Oil companies were asked to do to bear that 1 rupee kind of thing as an extraordinary situation. I think that sense of extraordinariness is disappearing. So oil companies will probably be able to make up for some of the losses. There is no proposal at this moment about how to deal with the excise duty cut in the right.
I do want to talk to you about a certain sector that is potentially, threatening what could be another NPA in the making, and the sector, of course, is telecom. Many people believe that because of policy measures and hyper-intensive competitive intensity in the market, we perhaps could see a lot of the debt of telecom turn into NPA. Some of the tallest stalwarts of Indian telecom, I think Kumar Mangalam Birla has reached out to the government for a lifeline, a package of sorts. And even if you look at numbers in perspective, Bharti Airtel reported a quarter loss of 1100 crore rupees. Vodafone has written a quarter loss of 4500 crore rupees. Can the government, and because you will eventually have your skin in the game in that sense, because if this were to turn into NPA, can the government afford telecom to turn into an NPA? And is that on your policy radar right now?
See, I think Finance Minister has also spoken about it. There are two sectors presently in the Indian scene which are feeling some sort of stress, telecom and the airlines businesses. But much of the stress there is on account of over competitiveness, if I may call it that, and the pricing remaining much lower than the potential. The government levies are contractual, which have been there when they bid out for those spectrum and other things.
But I think Mr. Birla has also said on record that he may not be able to service some of the government levies. That's how bad the situation is.
No, I think everybody is obliged to stick to that part of the contract, and my understanding is they've been paying whatever is due. We did, sometimes we can look at some solutions, like it was done a couple of months back when the payment were changed from 10 years to 16 years, but without any change in the NPV. Right? So there is no loss to the government. Right? So you pay higher for the longer. It then becomes a cash flow solutions, not any benefit, that kind of thing. These licenses are only for about 20 years. 16 years is what is also. There are some issues connected with their guarantees, which have been here for some time. So there are some ways in which probably some relief can be provided, but without compromise. I don't see any case where the government should do any bailout or anything of the sort.
But I agree with you that the government shouldn't do bailout for private telecom operators, and the hyper-intensive competitiveness in the market needs to be perhaps tempered down. But who will you blame for this hyper competition? I mean, isn't government policy making and regulator at one point of time going to be responsible? The buck has to stop with policy making on this. You can't preside over the death of a sector which was once called the sunshine industry of Indian, Indian telecom.
No, I don't think that I would be able to comment on that. It's basically the market players. It is for them to discuss. Incidentally, it's not that there are loss-making but growing sectors. Today, if you look at the e-commerce companies and many other new startups, they run up a lot of losses in the initial.
But that's their model.
Right.
They burn
Correct.
cash and then eventually.
So it's for the market participants to decide on what kind of model they want to pursue, and the other participants in the market to compete in that space. I don't think there is a role for the government there.
I think there's a role for a regulator, and as the Department of Economic Affairs Secretary, you may not say that, but what the heck, I am a journalist and I can say that I think TRA at one level is going to preside over the death of Indian Telecom, and they should be waking up and smelling the coffee there. But on aviation, sir,
That's your assessment.
That's my assessment. I'm saying that, and I'm saying that with all responsibility. I think I think hyper competitiveness in the market needs to be taken care of, because you can't preside over the death of a sector. But let me.
Regulatory mandate is normally to introduce competitiveness.
But look at what has happened. The market has come down from 14 players to 3 players now.
Competitiveness is more handled by the competition.
I understand, but look at what, I mean, I think somebody has to look at the, I know it's a wrong conversation I'm having with you, but the landscape of Indian telecom from 14 to 3 operators, eventually it's going to hurt consumers. But okay, telecom was a profit-making sector. Airline has always been a sector that has been in the doldrums, more at the mercy of policy making, because, aviation turbine fuel makes up about 40% of operational cost and all of that. Anything happening on that space? And I think at least these guys have been very vocal from a policy making point of view.
Would we see in the newspapers and all that there are certain probably adjustments and other things are happening, but that's for the market players. We don't have anything.
Okay, now that we've done enough on the state of the Indian economy, I must ask you some very interesting board meetings that you've been a part of, and a tug of war that was going of sorts. Is this uneasy truce between the RBI, or is this ceasefire right now between the government and the central bank?
When you use the expression like truce or uneasy, so it assumes that there was something somehow.
There wasn't anything wrong?
I don't think
there wasn't? You can say that with a straight face to me. There wasn't anything wrong between the central government and the central bank.
So this is an evolutionary process. The central bank and the government of India interacts in multiple ways. Our relationship with the central bank is multidimensional.
Sure.
You perhaps won't realize how intense and how different formats are there under which we so intensively discuss everything. I was mentioning to someone, on an average, there are 2 to 3 communications which go from my department to Reserve Bank on different things. It's currency, markets, this and that, asking for views, discussions and all. So it takes, there are so many meetings which we conduct here, which takes place there, where government, RBI officers participate, discuss, decide.
So then what happened? Why did the relationship become so openly volatile and openly? I mean, why were there Twitter wars and why were there speeches being given? So one would ask that, right?
So that also,
that's a new dimension in this relationship. This wasn't an existing dimension.
My sense, it's more of a media and academics creation.
So when Deputy Governor Viral Acharya says wrath of markets and the DEA Secretary tweets wrath of markets because there's been a blip up, is it a media creation? Or is it tit for tat?
Did you hear anyone from the government?
No, I read tweets. I may have not heard.
Or even from the Reserve Bank, other than one speech. I will come to that one speech if required. Anything about what you would describe as a war situation or something?
Of course. I'm not going to, you may have not said it on record, and there are cues and perceptions we pick up. I think you're right in saying that you may have not been at war, and I think these are things that we use in the media. But things have never come to this point between RBI and central government.
No,
I
wouldn't even...
This is not an intellectual disagreement, sir.
No. Even there, you see, I think 2 things probably made a lot of people believe that there is some uneasiness or some sort of
Did it start with the speech?
So, 2 things. One was what flowed from the direction of the Allahabad High Court, that you start a consultative process under
and the RBI wasn't willing.
So, that arose from a court direction, and so that was one. Second, possibly the tone and tenor and the words used in that speech. Normally central banks don't speak with this kind of language, and when this was used, a lot of people possibly thought there must be something very, very serious. I think these two possibly gave credence to or created or consumed up a kind of scenario as if, but it's not that bad.
I'm glad to hear it's not that bad. I'm sure markets will also heave a sigh of relief. I wonder what do you have to say to your own tweet in response to that? What do you have to say about people like Mr. S. Gurumurthy, who 48 hours before a central bank's board meeting are writing out policy prescriptions on what the bank should do? I think this is what was fueling the rumor. But anyways,
the only that tweet which you are referring to, you see, the construct of that speech was that
if it's going to be a disagreement, it will attract wrath of markets.
There is some situations like the central bank being subjected to some sort of pressures or something, and if central bank governors take some decisions, the markets come back with wrath and fury, and that was the concern.
So when the markets went up, you couldn't resist putting that out.
But
sure, I understand. Yes.
What I think the commentators in the media went completely wrong was that situation is not there in India at all. Most of the discussions was focused on monetary policy, right? Monetary policy, the central bank has a whole lot of independence and autonomy for a purpose. The purpose is that there are times where the fiscal policy and the government's expenditure program can run contrary to what
the monetary authority wants.
What the government's own sort of mandate for maintaining inflation is. So today we have an inflation mandate set by the government. A lot of people forget this 4% inflation mandate is set by the government under the Act. Right?
Yeah.
But if in a situation where the government is pursuing a policy, a loose fiscal policy, let me say, and then the Reserve Bank is called upon to pursue a policy which is contrarian to control the adverse effect of such a thing, that independence and autonomy is needed. But is that the situation here in India? The government is running a fiscal policy which is so sound. It's not at all loose, it's not expansionist at all. The situation in India is not there. So anybody imagining that there is likely to be a situation where the central bank may have to use its extraordinary powers for monetary policy management in a way. So it was,
no, I'll tell you,
the whole debate got created.
I understand. Okay, you know, when there's nobody to blame the media, I will take some part of the blame. I'm taking some part of the blame that, you know, obviously it was highlighted, and do I dare use the word blown out of proportion? The reason why I'm asking that question is that from invoking Section 7 or reports of invoking Section 7 to now there being a very active disagreement on the BFS, the committee that is supposed to look into, say, a PCA, and the government now wants to nominate some members there. Is there disagreement on things like these? I mean, are you not comfortable with the governor, 4 deputy governors, 4 nominated members of RBI that is going to look into PCA? Why do you want government nominees there?
Let me again tell you, there is no proposal.
You're saying that on the record?
Yes, to nominate a government nominee on BFS. There is no proposal. Now, how many people are imagining this?
I'm just quoting reports.
So, I don't know which report these are.
Okay.
There is no proposal. Like what was created as a big impression that the government is asking for transfer of 3.6 lakh crores or 1 lakh crore. There was not a single reference, oral or in writing, asking for this kind of transfer to be made.
We will address that next.
Right.
But you are saying that there is no proposal whatsoever to nominate government members on the
yes, it is
BFS.
Not.
Okay.
Right.
Okay.
It's not there. What is, and you refer to the Section 7. Section 7 is a part of the broad architecture for setting the governance structure of the Reserve Bank. Consultation, as I said, takes place in various formats. some consultation was initiated under this measure, and that's all. So people's imagination runs riot.
Very, very wild. So you're saying that right now you're fine with the committee that is going to look into PCA norms?
No, let me correct.
Yeah.
There is a proposal which will come up in the next board meeting to discuss about the governance structure itself of the Reserve Bank. Right?
I'm going to come to that next.
So as part of that, there might be some discussion on how do we create committees.
There are people, there are experts, there are commentators, former central bankers who believe that this is an attempt to control and to make RBI a more board-governed institution. Can a central bank be a board-governed institution, and should it be a board-governed institution?
Let me first tell. So RBI statutorily is a board-governed institution. Reads Article 7. It provides very clear that it is the board in which the power of management and supervision of the Reserve Bank lies.
So are you going to take that letter to spirit as well?
So it also lays down statutorily all regulations can be made only by the board of directors with approval of the central government. So this 1949 construct which was there was also board approved regulation approved by the government. But over the years, a lot of changes have taken place globally. Our systems have become far more integrated. The financial system has expanded. Regulators have also evolved. In our country also they have evolved. Elsewhere they have evolved. Transparency, system of consultation on regulation making. These are all practices which are being adopted increasingly by the regulators. So there is a feeling that we should have some discussion about whether any better or a revised governance structure should be there. And that is what
So why I ask you that question is that monetary authority or monetary policy or what the RBI does, mandated by the Constitution of India, is a very specialized role. Can board members who represent corporations and who are CAs, who are specialists in other fields, can they be dictating terms to a set of specialists? Which is why the question is, which is why one doubts the intention of making RBI a board-governed institution. One doubts it because one feels, is this an attempt to control and to perhaps limit the autonomy of the RBI?
I think we even forget very recent evolutions. Before 2016, the monetary policy...
I understand, MPC is one such structure.
So that's a governance evolutionary thing which happened.
But again, sir, it's a body of specialists. It is not as if it's a body where some corporations are being represented.
Let's say that is precisely... So the MPC was created to take over, in a way, what was exclusively within the
domain of the governor.
Right?
Yes.
And now we have, and this has happened all over the world that way. Much more participation takes place. There may be a possibility that for the other functions of the Reserve Bank, right? They might be better to create more specialized bodies or committees for taking care of that, right? So that is what my sense is, that we should not shy away from the discussion and examination. Have a fresh look. Let me assure you very clearly, there is no attempt at all to either curtail the powers, because what has been given, the institution has been created, such an important institution for the financial management stability of the country. The government has been the active participant in doing it. It has been nurtured by government.
I agree with your point entirely on one thing, that we should always debate, we should always discuss, we should also always review with changing times. Agreed on that point. I may have a different view on autonomy and will it be curtailed. Fair enough. But the question what I'm asking, sir,
is not at all.
I understand. You would want to guarantee autonomy. If this were to be the case, if it is going to be a more board-governed institution, if you want more subcommittees to govern functioning of RBI, then do you also have to review the entire composition of the board? Because there is conflict of interest then. I mean, how can corporates be sitting on RBI boards and dictating terms to what is a specialist body?
Very fair point. So when the composition is also defined in certain ways.
Sure.
This is what it is. It is set out in more generic ways, where expertise and experience is what is brought in, right? But if it requires some rethinking and some better formulation for more expertise in the related field, etc., that can also be discussed. Why not? I don't think there is.
So you do believe that this has to go hand in hand. If it is going to be a more board governed institution, then the board composition also has to be reviewed.
It can. Shortly, why not?
I mean, do you agree with the premise that then the board can't be composed the way it is right now?
What I would believe is that we have to have what normally is described as fit and proper kind of concept. That we have members which are fit and proper for the job in the central board is entrusted with.
The reason why I ask that question is because if you're going to make it a more board governed institution, then you can't have people whose businesses are going to be impacted by the decisions that the RBI takes, if it is at all going to be that situation. But let me take it to the other thing, and you know, especially I'm going to take it term by term quickly. On the PCA bit, there are lots of people who believe that yes, these norms should be reviewed, rightly so. The last
I don't want to get into
I know you don't want to get into
item by item discussion.
No, I know. But isn't
Let's keep it broad.
But exactly. But isn't it in some way also going to, the dilution of PCA norms itself, do you believe can perpetuate what is called suspicious lending?
Let me tell you.
I mean, there is a reason why these banks are considered weak and put under the prompt corrective action.
There is a bit of misinformation here. There has not been any attempt by the government to ask for any dilution in what we believe are internationally accepted norms. Right. So let us be clear. This government has been subjected to the requirement to infuse so much of capital, thanks to what asset quality review and other things has been done. The kind of capital we have provided in last 3 or 4 years is unprecedented. I think about 60-65% of the capital ever provided has been provided in the last couple of years.
True, yes.
Right. We have also seen the impact of that constrained balance sheets of the banks in terms of their ability to lend and all.
Absolutely.
So we have faced the implications of those things which have been done. Still, at no stage, the government has said that dilute anything. All that which is being asked is that let us also debate what is fair and also in line with the internationally best practice. Right.
No, there are people who say that these banks are now flush with deposits. There is no reason why they should not lend. So on that ground, I agree. But
let me tell you one more thing. See, the whole discussion on capital, the capital is a kind of assurance, a guarantee to the depositors.
True.
Right. That if these banks were to lose some money, the capital would be able to take care of the losses and they wouldn't suffer. That's the role the capital plays. And it assures the depositors and other lenders to the bank. In PSB's case, public sector bank, the assurance or the confidence of people is not built by capital. It is built by the ownership of the government. Even when some banks are placed in PCA framework, there was no impact on the deposits.
There was no run on those banks.
No, forget run. There was no impact even on the flow of deposits.
But that's the comfort one gets when the sovereign is the owner.
So, and that normally is the purpose which capital is supposed to be placed. So, we shouldn't give over importance to the capital issue in PSB's case.
True.
The same objective is achieved by the government ownership. But this is again no argument to say that we should have a lesser norms or reduce it. We are completely comfortable with best of the international practices on this.
I'm fine with the review. I mean, you know, if there is a debate, let's review that. Fine. The only thing is that this should not lead to suspicious lending. You know, there is this debate, and you referred to this yourself a little while back, which is raiding of reserves. I hate the phrase. I don't know why some in the media use it. It's not as if this is some money that you're going to plunder. This is, after all, government's equity parked with the RBI as an asset. The question, though, is that why do you need that money? And the reason why people are suspicious of the government even alluding to some of the transfer is because we believe it's an election year. Could there be a populist bonanza? How is this going to change the inflation position? Whatever money the government, what the RBI transfers to the government in that form, they will have to sell government bonds. Otherwise, there's going to be an inflation issue. What do you need that money for? Is the big question.
It's a massive hypothetical situation, right? At no stage, I've said this to you.
That's why I'm asking you.
We have said officially this one. At no stage was even a suggestion that you should transfer any money out of your reserves. And still see the kind of...
So then why is there a committee?
Which committee? The committee is for designing and reviewing the economic capital framework.
Yes.
It has been done from time to time. The capital framework has been, see, the basic provision is that the Reserve Bank should make provisions equal to what normally the bankers make.
True.
And that provision is a charge before the profit of the Reserve Bank is transferred to the government. Otherwise, the mandate is that the profits belong to the sovereign and profits are to be, shall be transferred to the government. That is the, for determining what provisions you should hold, from time to time, the committees have reviewed. In last 20 years or so, there have been 4 times. Subramaniam committee went into it, then Usha Thorat committee went into it. Then again, there was committee, and then Malegam committee. So in 2014, when it was last reviewed, they determined that the Reserve Bank was holding about 1.49 lakh crores extra than what it requires as its capital and reserves, right? Then a framework was adopted, which we were not comfortable with, because that framework, in our judgment, is very
when the surplus was being transferred,
very excessively conservative one, which in our judgment is hardly followed by any other central bank. So we have been for last 1 year or so, ever since it was so adopted, been asking for a review. Now board debated and the Reserve Bank agreed that let us go through another committee which can look at it, what is the right kind of economic framework is, and that's why this committee. But people using extreme terms like raiding, quoting agency reports to give some credence to the kind of stories. I think that was most unfortunate. That's best avoided. And then everybody's imagination run riot, and then people start speculating.
It almost seemed like people from North Block were wearing those plundering eye caps and going to raid reserves of the RBI. But okay, that debate settled.
First of all, we never asked.
I think the reason why, I think it raised the questions because people thought, why are you fixing what ain't broke? I think that is where the suspicion came from. And people perhaps...
This is also an amazing argument.
Yeah.
It is being...
So you think it's broke, which is why it's being fixed?
It's being fixed from time to time.
Fair point.
It requires periodic fixation.
I think the other issue on which you haven't taken a call and you will in the next RBI board meeting, and this is the last 2 questions I have, is on liquidity. There was a liquidity crunch for the NBFCs, and there was this massive cry, not just from you, but the industry and many other experts. They thought there should be a liquidity infusion for that particular section of corporate entities. We've kind of, tided over the worst of liquidity crunch in NBFCs. Do you still want liquidity for the NBFCs? Because many people believe this could amount to exposing the central bank and the system to some risk.
See, liquidity situation is such that it keeps on changing from time to time, both at the system level as well as the segmental level, right? Even this year, in first 6 months or first 5 months, there was systemic surplus liquidity. It changed in October. We are more or less now in systemic illiquidity. That happened also partly because the Reserve Bank used about $20–25 billion of its reserves, right, to supply dollars in the market. When it does, the money supply in the economy contracts, liquidity contracts in the economy. That happens because dollars come in, Indian currency, money goes into it. So the liquidity situation keeps on getting created. It need to be monitored and decided from time to time what to do it. Then something happened in the NBFCs, mutual funds space, etc. Sudden withdrawal from the liquidity, reduction in the inflow of the funds to the mutual funds, etc. And those people who are, or those firms which are relying more on those short-term funds, suddenly faced a situation that they may not be able to roll over there or refinance themselves. I don't think anybody, whether it's government or a Reserve Bank, can ignore the fact, and I'm not saying that Reserve Bank ignored.
Yes,
they didn't ignore it either, right? So that situation required resolution. Some measures needed to be taken. Partly they were taken by the government, partly taken by them. At this moment, my sense is that as far as solvency issue, that some firm will fall.
That is behind us.
That is possibly behind us. But this segment was the segment which was actually financing a lot of consumption, investment, expenditure, housing, otherwise. That still requires provision of liquidity for them to continue, even if not at the high rate at which they were doing, but at the normal growth rate. That funding, that liquidity is required.
No,
and therefore the subject need to be discussed. We can come to the conclusion that some more things are required and those more things can be done. But at no stage either there is any attempt to protect any weak firm or any weak quality of asset by the government, by the banks or by Reserve Bank. Nothing of that is there.
Actually, the reason why I asked that question, many people thought, is this going to impact second half's growth numbers because there will be a crunch on, consumption and all of that. You've cleared the air on this. There seems to now be reports that suggest that after NBFC, one of the directions in which you will be pointing discussion at the RBI board meeting could be the real estate sector.
No, I don't think we discuss any sector in time. There is no need.
So there is no pipe. There is nothing to the effect that real estate.
If at all the liquidity gets discussed, it should. Then you discuss the liquidity in the broader, in the segmental sense.
Right. So it's not as if liquidity concerns are still being talked about as far as real estate is concerned, because that's one of the figures. There is a reason why I'm asking you this last question on MSMEs or on real estate. Many people think that while the RBI is being made to act now and should act now if these sectors need a helpline, and great, you've done something for MSMEs at the RBI board meeting, but did the problems not begin with demonetization? And in some sense, what began with demonetization is now being fixed by the RBI.
No, see, demonetization,
whether it's real estate, whether it's MSMEs and all of that.
See, I think this is very unfair reading. The kind of sectors, it's the MSME, in that space which might have been affected by the formalization drive of the demonetization as well as the GST business. They didn't have the access to the credit even earlier. So there is no way anybody can argue that those segments are adversely affected from the banking side or from the provision, even from the NBFC side.
Right.
So that's not a real situation at all.
A quick last question, and the last question has to be when the board meeting began and after what doesn't seem to, are you saying it was a media creation? Were there pleasantries exchanged and did it end on a good note? Was there a meal shared? We kept waiting for the lunch break to happen. It happened at about 3 p.m. What were you people discussing? But you didn't feel the need
I
to
don't
eat?
think you can spend 9 hours together discussing and deliberating on serious issues without being very cordial.
Were there light moments in this board meeting? Many would want to know.
Subject is quite serious.
So no light moments at all. Okay. On that note, sir, thank you very much for speaking to us.
Thank you.